Clients, customers, branches, new associates. We spend so much time, effort, energy, and money to attract them. What are we doing to retain them? It's not just about attracting, it's also about what you do to keep them. In today's episode, we are going to explore how attraction and retention go hand in hand, yet so few have actually mastered doing both well. Ladies and gentlemen, boys and girls, children 18 plus, you are tuned in to the Loan Officer Podcast with me, Dustin Owen, and my main man,
JC
John Coleman.
Yo, what's poppin'?
Bro, I got some sun this weekend. Can you see that on my forehead?
No, where'd you go? Outside?
I was outside for like a solid 6-8 hours on Sunday.
Did you do yard work?
I did not do any yard work this weekend.
What'd you do, Dustin? You went fishing?
I didn't go fishing either. I would love to go fishing. I need to book a fishing trip.
You went to the Florida
Corey
Gun Show?
Johnson, where you at? Someone knows Corey Johnson with Cross Country Mortgage down in Jupiter, Florida. Let him know it's time for a guy's fishing trip to the Bahamas.
You went to the Florida Gun Show at the Orlando State Fairgrounds?
I would probably not ever choose to go to the Florida Gun Show at the Central Florida, wherever you called it. Okay, you're showing me your guns. You must be working out.
Aja did that to me the other day, and I almost fainted. It was so bad.
Your wife flexed on you?
Yeah.
That's awesome. No, I was outside. It's the kickoff of the Special Olympics tri-season. So the triathlon season kicked off. So we went to Lake Louisa State Park, whichever in Central Florida. It's a gorgeous state park. Went to Lake Louisa, but I had to do my workout before the athletes got there for their workout. So I got there early. I did a nice 8-mile run.
What the fuck?
The weather was gorgeous.
What do you mean a nice, like,
the
that's
weather
not a stroll
was
through the
so
park. That's
gorgeous.
a fucking triathlon.
It was one of those days where you start with your shirt on because it's a little bit chilly, and then all of a sudden you're like halfway through your workout and you're taking your shirt off, and the sun feels really good beating down on your shoulders. So that went all well and good, but then I took a break between my workout and their workout. I maybe forgot to reapply some sunscreen. And then once the athletes got there, we rode 13 miles. We did a couple miles of running. We did some drills. We jumped in the lake. We did a quick little swim. And then when I got home, my wife looked at me and she goes, "You didn't put on sunblock." I'm like, "Yeah, I did." But what I didn't do is reapply. So there you have it. I had a great weekend.
That's a great story, Dustin. Way to kick off the week strong with that one, man. I don't know how I'm going to follow that one
What
up.
else you want to talk about, John?
Nothing, Dustin. Let's just jump right
Iowa? You know, Nick Mundorf just texted me, wanted to know, hey, do I need to make room for JC
and you
at
said
dinner?
no, he's not. You said I'm not going, apparently.
Yeah, and no one invited your ass.
Oh, shit. That's fine by me.
Look, I would love to bring you along. A, I never know if you'd want to come. And B, I need to let the sponsors know that's an extra flight and extra hotel. John and I do not share hotel rooms.
Also, I've started to realize, like, when I start traveling again on planes, it's going to be first class.
Only.
I'm sorry. I can't deal with this. I can't deal with gin pop no more. It's a pain in my ass, man.
Look, sometimes you have to hop on that Southwest flight because it's the only direct flight.
Early bird, pay $50 more, $100 more to get that A1 check-in. I have to do it now, Dustin.
Yeah. Well, Nick and the rest of the Iowa mortgage lenders, I apologize, but I didn't know John was also invited.
I'm always invited. Remember that kid? First of all, shout out to Nick Mundo for actually remembering my name, because usually, hey, where's your guy, the co-host guy? Bring him along. So just from now on, Dustin, always just bake me into any travels you have. Yeah.
Well, I'm looking forward to that. So I'm heading up to Iowa. By the time this airs, I'm going to be in Iowa.
Shout out spring, huh?
Yeah, shout out to spring. Although it's going to be pretty chilly up there in Iowa. I don't think they start seeing like good weather until June. And by good, I mean like sun and shorts and flip-flops.
Shout out Florida for always having nice weather, though, kind of.
Yeah. But anyhow, let's go ahead and jump into today's episode, John. How about that?
Okay.
Yeah, because look, usually when John and I sit down to discuss the next show, it's not like we pre-plan this.
One day we will.
Weeks in advance. Okay, normally he and I sit down. We're like, hey, what's going on in your work world? What were y'all talking about in some of your meetings? How was your last coaching call? Like John knew that I did Rocky's call last night.
Shout out Rocky.
And shout out to Rocky. Shout out to MLO Study Buddy. They are a great supporter of the show. We're a great supporter of MLO Study Buddy. It's our go-to resource to help every originator study and pass the NLS exam, right? So that's our go-to resource. But Normally John, when he knows I did MLS Study Buddy, because I spent 2.5 hours last night, 8 p.m. to 10:30 p.m.
That's a long time.
We had about 50 originators, some newly licensed, some been licensed for a year, some are still studying to get licensed, just wanting career advice. So we get a lot of inspiration from that. And I think today's inspiration really came more from a couple of guys that I'm close with here at Lower. Shout out to Jared Ward, shout out to Chris Fleming. And, the three of us putting our brains together, just talking about like, what do our LOs need to be doing better to become more successful? What do we as divisional sales executives need to be doing better with our branches and even mortgage companies? Like if we owned our own mortgage company, what do mortgage companies need to be doing better? And we find that there are originators, there are branch leaders, there are company owners that may dominate at attracting talent or attracting new clients, but their ability to retain is a little bit sus. Or I've worked for companies in the past, we crushed it with retention. I'm talking like we were sticky AF. If you came and worked with us, you stayed. It's one of my most proud accomplishments. Like I look at my 16 years, I look at the managers that we had with us, the sales support administrators that were with us, the processors turned underwriters who were with us with themselves 10, 13, 16 years experience. And it let me know a lot about what we were able to build and how special it was. We were very good at the retention aspect. The attraction aspect, it needed some work. So what I've learned is that whether you're a mortgage broker just getting started, you are a branch operator, or you own a company, let's dive into how in order to be uber successful and to be well-rounded, we have to dominate both in attraction as well as retention. And I think from a story arc standpoint, what we'll do is we'll take it at the base level, down in the trenches, down and dirty with the originators. And let's talk about realtors and borrowers, our clients and our customers. Then we'll make a little segment for our branch managers and our branch leaders. And I want to give a shout out to the newest members of the TLOP Originator Coaching 16-week boot camp called Boost. This is a small group that I'm doing specifically for producing branch managers. And then we'll make some content for our company owners.
Okay.
Yeah. You good with all this?
I hope so, man. I'm
at
about
what
to
point
tune
do you,
out.
yeah, I would say, at what point do you think you're going to tune me out?
As soon as we're done, like shouting out these sponsors, I'm zoned.
Today's episode is sponsored by our friends over at Mastermind Summit 25. Matt Emery puts on one of the greatest mortgage sales events of the year. It's hosted in Las Vegas, Nevada. The dates are June 25th through June 27th. The hotel is the Bellagio. You are not going to want to miss this event, especially if you love to learn from some of the best in the business, especially if you are an originator who thrives off of networking and masterminding with other mortgage professionals who are also in hyper growth mode. Plus, to make it even better, TLOP's going to be in the house. Go to our website, tloponline.com. That's TLOP online.com. And under the events tab, just click and you'll see a spot to register for Mastermind Summit 2025. We look forward to seeing you there. All right, JC, you tuned out now? Or are you going to tune back in?
Tuning out. Go ahead. What do you got to talk about?
I need some help here. We're going to talk about attraction and retention.
All right, attraction. You want to have cool, sexy things. You want to have like your lobby smelling like lavender, like you just walked into the JW Marriott. That'll attract them. High ceilings, glass conference room, stuff like that.
And who's them in this scenario? Is them new associates or is them customers that are going to use your product or service?
No, new people that you're going to work with, so new associates.
Okay.
This is how you attract them. So with like fancy like swag, stuff you don't need, big screen, monitor, MacBook, top of the line gear, that's how you attract them. And you keep them by closing loans on time. Are we done? I think that's really it.
That's the world according to John Coleman. One day we're going to get like a real producer in here, like, someone to work under you.
Yeah.
Right. And then we're going to ask that person to go through like 500 episodes.
The JC-isms.
And just, put together like a nice highlight reel of like the top 50 JC-isms.
Yeah. Don't have a shitty lobby when you come in, even though nobody's going to work from your office. You just still need like a nice office. So you need like games, a foosball table, free food, free snacks, always stocked fridge. That's going to, attract the people.
I don't disagree with that. Yeah. Now you might not need 15,000 square feet. You may have 3,000 square feet where 800 square feet's the lobby. 800 square feet's going to be the rec room, break room. 800 square feet's going to be like your training room. 400 square feet's going to be your conference.
Standing room only is for cubicles because nobody else is going to be in there slinging loans.
Correct. And then it's standing room only.
Yeah, so it's basically a party. It's like a bachelor pad, really. That's what it turns into.
But it looks cool AF when you tour the facility.
Correct. And then on the other hand, you want to be able to reach out to your help desk. I think you need a good CRM that manages your pipeline. You want like some form of automation and technology to be integrated into your workflow. And finally, like I said, you want to have a processor that's not crazy and all up your ass, but you also want a team that can push loans through in a timely manner. That's it.
All right. So I like where you're going with this. This gives me some direction, something to work off of, John. I appreciate this.
Thank you. It's like when the teacher called on you and they thought you didn't read the chapter, and I actually did skim it, so give myself a B-.
I will second that B-. No, let's check this out. 2-hour originators. Okay. Let's talk first about attraction. Okay. So how do we attract referral sources? Well, we have to understand that people do business with people. Period. End of story. Not with companies, not with products. People do business with people. So what do you have to do to show someone that you're worth working with? Right? We have to meet with them. You have to show them you care. You have to ask them the right questions. And those questions should be all revolving around ways that you can solve for whatever their pain points are, which typically their pain points, if you're talking about referral sources, is they want either more business or they want to do their current business smoother, right? That's what they want. So when I meet with somebody, I'm there to ask them questions about themselves. I'm there to ask them questions about what they did prior to real estate, or if they're a financial advisor, prior to becoming a financial advisor. I'm there to ask them, what do they like best about this profession that they've chosen? I'm there to figure out, how did last year go for them? What's next year gonna look like? And then I'm trying to decide where I can fit in to provide value. Now, along the lines, I'm looking for commonalities, right? If they are a parent, I'm also a parent. If they're from this area, I'm from this area. If they're not from this area, then I should ask them questions about where they're from originally and what brought them to our area. If I like to travel and they like to travel, I'm looking for commonalities where we can have some kind of a bond or connection, because I recognize that people do business with people. So that's how I get those people attracted to me. Now, the second thing is, once they start using me, how do I get them to stay using me? Well, I got to do a damn good job, right? How do you do a damn good job? It's pretty simple. You pick up the phone when it rings. You under promise, over deliver. You do the right thing always, and you over communicate. If you can do those 4 things, I don't care what your industry is, I promise you, you are successful. Now, you also have to do things like show gratitude and be consistent with your messaging. That's why we coach and teach celebrating people's birthdays. That's why we coach and teach doing things like newsletters or sponsoring happy hours or lunch and learns, because it's my way of looking to stay top of mind. It's my way of having a reason to reach out to the people who matter the most to me, to invite them to an event. It's my reason to make sure that I'm seeing them and they're seeing me and they're hearing from me, because I'm trying to retain them. I work so hard to get in front of them. I work so hard to get them to like me. When they give me an opportunity, I can't fumble the ball, but it's not just doing a good job. Sometimes it's doing a good job and showing gratitude, right? It's like what my father taught me about being a good husband, right? It's like, it's all about the small things. Do the small things well, everything else will take care of itself. So I think as a loan originator, when I was sitting down and planning out where am I in my business and where am I trying to get to and what's preventing me, I'd first say, are you doing enough to attract new clients and new customers? And then once you get them, what are you doing to retain them? And retaining isn't just doing a good job, but it's also staying top of mind and showing gratitude. So that was a client. A client to me is a referral source. If it's a customer, that's a borrower. If you're a mortgage broker or a loan originator. So then the same thing applies. It's one thing for me to give great advice up front. It's another thing for me then to turn that great advice into a smooth, successful transaction. But then I did that to attract them. I got paid. Life moves on, but where does my relationship go? What does my retention plan look like? And I think so few loan originators embrace being a true lender for life. Like, what does a lender for life do? Well, lender for life celebrates your clients' birthdays, even if it's just via text. Lenders for life proactively offer annual mortgage reviews. Why? Because it is for the health and benefit of your customer, but it's also a way for you to look for other opportunities to serve.
Mm-hmm.
A lender for life keeps them up to speed on what's going on in the market, both economy and in housing and real estate. And they market themselves as a source of information, meaning, look, John, you're my customer. If you ever have a question regarding the market, real estate, a document you received in the mail, I should be your first phone call. Like, because that's a service that I provide to you, but so few actually do it. But it's like, man, if we worked just as hard to retain the talent, to retain the customer, to retain the client, we wouldn't necessarily have to work so hard on the attraction aspect, right? And I think that's where so many people go wrong. It's that they either A, don't work hard enough to attract, therefore they're constantly trying to squeeze more blood out of that same turnip, meaning they're trying to get more business from fewer people. Or you have people who crush it at attracting, but then they just fumble and drop the ball at serving and retaining, at which point now you just kind of created this massive, like, I don't know what you'd call it, like a hamster wheel, or like running in quicksand, where all you do is try to bring on new clients, new customers, but you didn't have to work that hard if you were on the back end putting together systems and processes to retain them.
Well, if you're a loan officer, isn't the thought process, well, like, hey, I worked hard to get you this loan, you're in the house, I don't need to talk to your ass for like another 4 years when it's time to refi? Isn't that usually the thought process? So I could care less about your birthday in between those 3 years when I need to reach out to you again because rates just dropped.
If I were coaching you, John, I would tell you worked so hard to win that customer. You should learn and focus and put as much effort into learning how to consistently turn one transaction into 3 new leads. There's a buying agent, a listing agent, and that particular borrower should all be referring you. And it's like, I don't know, is it easier to consistently get out there and grind away at finding new referral sources and finding new customers? Or is it actually easier to retain the ones that you've already brought in the door? I have found it's easier for me to retain. I actually enjoy that work a lot more than I enjoy the convincing of a stranger to do business with me. Right? Once I've conducted business, we're no longer strangers. We're now acquaintances. We're now partners. We're now, have some kind of a friendship. Way easier for me to work with people I already have a relationship with versus people I don't know personally. So yeah.
But isn't it okay? So I want to attract more new people because I get paid instantly or more quicker on the new people. Whereas if after like the retention, I just have to keep them on the back burner. I'm not like pulling new money out of them on the regular. I have to wait. There's always like a waiting period. Isn't that correct?
Well, I think the answer is, and what we're trying to get at with today's podcast episode is it has to be both. We can't just dominate one and not the other. Right? Yeah. If you just try to dominate being that lender for life, like that person might not have that many transactions left in them. That person might not be willing to refer you, right? So it's, yes, you have to be equally focused on attraction as well as retention. But what I witness is loan originators and branch managers and company operators, they tend to either focus all on one and not the other. And I'm like, I don't think that's healthy. I think we have to be equal parts. So yes, you have to be continuously out there generating new leads, attracting new referral sources, but let's not turn our back on those men and women that we've already served, because it's not as easy as in 3 years they'll remember you. If you weren't calling them on their birthday, if you weren't doing annual mortgage reviews, if they weren't getting quarterly market updates from you, no, out of sight, out of mind. Easily out of sight, out of mind. If you're not reminding them that you love it when their newlywed daughter calls you to ask you questions and advice about buying her first house, like you love that. That they're never bothering you. And those are scripts we have to use. Like, hey, John, please know you're never bothering me. Anytime you call me, I first love to hear from you. And second, like I consider you a friend now that we've done business together. I love to help my friends. So you're never bothering me when you pick up the phone and call me just because you got something in the mail that confuses you. Or you're not bothering me when you have your 26-year-old daughter and her new husband give me a call because they think they want to buy a house in the next 3 or 4 years, I'd love for them to start with me. I'll spend 15 minutes with them on the phone. I'll get them pointed in the right direction. I'll answer their most basic questions. Even if I know that I won't be doing their loan for 3 more years, I need them to know that I am their source of information, just like I'm your source of information. So like that's on the originator side. And we need to do it with realtors and borrowers. And we need to do an equally good job of attracting, but also retaining. And we need to build out systems and processes that allow us to attract on a consistent basis and retain on a consistent basis. That's where your CRM comes into play, right? That's where a social selling strategy comes into play. By the way, all things that we coach to the members of TLOP's originator coaching community. So if you're listening to this and you're like, man, that sounds like a lot, that's daunting. It's not, especially when you surround yourself with others who are already doing it, which is what we provide at TLOP's originator coaching. So if you want some business coaching, you want to be a part of a sales training community, go to tloponline.com and check out everything that we are currently offering. Because other than that, you then need to go find like a better sales leader to go work for. A lot of times you don't need a new sales leader. You may just need some outside coaching or training. Other times you may need a good sales leader, at which point you would get with Mark Holmes on our team. Mark's been standing up TLOP's career advisory services. This is something we're going to be offering new in 2025, going into 2026. It's a no questions asked free service to our listeners. Anybody who wants to bounce an idea regarding their career off of someone who has played in that space. Mark's been with us for 2 years at TLOP. Mark was with Microsoft. Before that, Mark was with another mortgage company. His background is organizational psychology. Like, he's a good dude to inquire about, hey, is my current career the right career for me, or do I need to make a move? Mark is offering that service as something that we're offering for free through our TLOP community, right? So anyhow, let's get into branch managers. So branch manager, same exact thing applies. Now we're going to talk about your clients are now originators at this standpoint, right? If you're a branch manager, your client is an originator. Same exact thing. Okay, I have found there are branch managers that once a loan officer comes to work for them,
never see them again.
Okay, well, that's not where I was going, but that does happen. No, there are branch managers that once we get a loan officer there, oh, they love them like their own. These branch managers have systems and processes. And when a loan originator comes to work for them, they can tie right into their systems and processes. These branch managers, they sit down once a quarter or once a month and they just talk for 30 minutes about life in that person's business and they invest in them. Right? So it's like once I get someone in front of this branch manager, I know they're good to go. I know this loan officer is going to be supported, they're going to be loved, and they're going to be in a good spot. But nobody knows about this branch and nobody knows about this branch manager because they do nothing to attract the talent. And it's like, well, what do you mean by nothing to attract the talent? Well, if you're a branch manager, what are you doing to put yourself out there? Are you attending networking functions? Are you hosting events and then posting about those events on social so the rest of the world, your clients and your competition, can see you're the type of branch manager that hosts events? You host events for the benefit of your loan officers. You then post on social about those events. You're the type of branch manager who's in the community attending, whether it's a mortgage broker or a mortgage banker event, or it's a women's council realtor event, or whatever the case may be. You're out and about in a man or a woman of the community. And then when you're doing that, you will start putting yourself in situations to have conversations. When people get to know you, you just start talking about all the ways that you support your current 4, 5, or 6 originators, and you'll start attracting talent. But I have found that there's 2 types of branch managers. Those that are great at attracting talent, but they suck at actually retaining. And there's those that are great at retaining, but attraction, they have no game plan for. And I look at those branches that I have either run myself or I have led, the most successful ones is because they equally have a game plan for attracting talent and for retaining talent, right? So they have a quote unquote recruiting plan. And recruiting doesn't have to be recruiting like you're smile and dial and you're just cranking out the cold calls. Recruiting could truly be, I'm active on social. I'm connected with the top 100 lenders in my market on social. I engage in their content. I post meaningful content, at which point they want to engage back in mine. I'm a part of several online Facebook groups where I'm a top contributor. I do show up to at least 2 industry-related networking events per month. I'm active in at least one of them. I host a mastermind once a quarter where I get myself, one of my top originators, and 8 other loan officers throughout the area, and we all meet for lunch. We all pay for our own lunch, and we just talk shop and share ideas, right? This is what men and women who attract talent, this is the type of stuff that they're doing. Now, they may also have some kind of a dialer or some kind of a business development rep who may be also cranking out the cold calls. I'm not dissing on cranking out the cold calls, but I'm saying you don't have to necessarily do it, but you do have to have some intentionality regarding the attraction of talent. Now, once they come in, John, you can't just disappear. And so many just do.
Why?
So many disappear. Like, oh, I haven't seen my manager in weeks.
I didn't even know I had a manager.
Yes. And that actually happens. It kind of grosses me out because that manager is attempting or is earning some kind of an override on that person's production. To me, that's the biggest responsibility. I made a commitment to that human being that if they come work for me, I'm going to support them. Not they're going to come work where I work and I'm just going to rip some money.
So what is this, like a bait and switch? Like if I was a loan officer, I would get an interview with a branch manager. I would come on board. He promised me the world, lie to my face, piss in my head and say it's raining. And then when I actually get hired, he'll like just ghost me everywhere.
You know, I don't know what it is. I would like to believe it's not malicious. It is ignorant, right? It's not someone doing it. It's like they get too busy and wrapped up in their own world, whether it's their personal life, right? Kids, spouses, health, etc. Their own production, because so many managers also produce. And it's one of those, they can't see the forest through the trees. The trees are right in front of them. That's their personal production. And that's what's going on in their personal life. At which point, pretty selfish, pretty self-centered. They can't think outside of those 2 aspects. Everyone and everything else is just a second thought.
How are branch managers in the mortgage space? Like, are they good at taking feedback? Are they very callous? Are they like, this is my way or the highway, since it's like their kind of show?
Most people aren't good at taking feedback unless they're in a rare place in life where they are in growth mode. And growth mode isn't more leads, more calls for them. Growth mode is, how do I become a better leader, a better manager? How do I become more efficient at what I'm doing? How do I take what I'm doing and just do it more profitable? So I can't put them in a bucket per se, but I would say equally, there's those that don't want it, and there are those that definitely do want it. And then of those that do want it, how many actually do something with it? That's probably a whole different conversation. But no, there are many that, and maybe they just didn't have a good leader. You know, it's like one of those like, oh, well, why did this, mom berate her children? Because she was berated by her mom, and her mom was berated by her mom, right? It's that whole.
So what type of person becomes a branch manager? Like, why would you want to become a branch manager? To like make more money? Is that the most case, or like really like facilitate people's careers? Like,
the world according to Dustin Owen, the real answer.
Give me more money.
They want more money. They don't want more work. They want more money. Now, some people have a servant's heart. Some people really want to lead, and they like to manage. Like managing's like, I don't like to manage.
Hell no.
I love to lead. I'm good at producing. I love to strategize. But there are people out there that really love the organization that goes into being a really good manager. I'm a good manager because I had to be. But if you ask me to do like an exercise where I talked about the things I'm good at but I don't like doing, in today's world, I would put, I'm good at management but I don't like doing it. Right? Because I love to lead. I would rather spend all of my time in leadership with some strategic, because I do like the strategy aspect of growing and scaling businesses, the team building aspect, but I would almost put that under leadership more than I would under management. And producing is just something I think you all have to do, but there's some people who all they want to do is produce, at which point you don't leave room for leadership or management. But most become branch managers because they wanted more money. And then they realize, wait a minute, there's not more money in management. There's actually more money in doing production. But then they have the title. They're like, I'm just going to do this. And then the biggest in our industry, I don't know what you call it. It's not a fallacy. It's almost like an annoyance. It's an ick. The biggest ick in our industry is when people just think, yeah, John, come work for me and I'll get an override on your production. And I want to say to those people, and I do say to those people, no, what are you doing to earn that override? I'm fine with someone getting an override on John Coleman's production as long as it's being earned. Like, you having a branch is not earning it, but you having a system that John Coleman can tie into, you're earning it. You spending quality time mentoring John, you're earning it, right? You having a team that John can benefit from that team, you're earning it, right? There's a certain way you can earn your override, but yes, to answer your question, so many, too many. It was all about, I just want to make more money. And that's where it's like, well, now you suck at retaining talent. Like, we got to get good at retaining these loan officers. That means you have to have systems and processes they can tie into. You have to have a set culture that makes them want to come to work. You have to get to know them as the humans they are. You also have to figure out where are they trying to go in their career and help them get there. Show them you care without forcing them to be like you, right? That's like the whole golden rule versus a platinum rule. Treat people how they want to be treated is the golden rule. Golden rule is treat people how you want to be treated. Golden rule. Treat people how they want to be treated. Platinum rule. Like, one of the biggest mistakes I made as a younger branch manager is I tried to manage loan officers to be like me. I'm a weirdo. Like, I'm unique. Let me figure out who they are and let me manage them to be better versions of them.
Well said, Dustin.
So that's what the retention aspect would be. And then on the company side, it works the same exact way. I mean, it's like when I learned how to flip real estate, the same principles go into flipping a single wide as go into flipping a quadruplex that go into flipping a 100-unit apartment complex. The difference is you're just playing with bigger numbers. More commas, more zeros. Bigger risk, bigger reward. So if you're a company operator and maybe now your clients are your branch managers, okay, well, or they're your regionals or your divisionals. Again, you can have this robust plan in place to attract the talent, right? And if I'm attracting talent and I'm a company owner, it's vision, right? Like, I want to attract the best talent. I have to have the best vision. I have to be a great communicator to communicate that vision. I then need to be able to paint the picture and show that person where they fit in that picture. Like, even if I'm just using my words. And then once they get here, well, to your point, you said it earlier, I got to freaking deliver. If I don't have aggressive pricing, if I don't have a robust product selection, if I can't get loans closed smoothly and effectively, if my company isn't filled with a bunch of great human beings who look out for each other, it doesn't matter how great my vision was to attract them or how awesome my lobby was or my training room was or any of that stuff that you mentioned that, by the way, aren't bad ideas. That's where the retention aspect comes into play. But that also ends up being a little bit of okay, that's a baseline. But at some point, they're going to need and want more for retention. So what am I doing to retain these people? Because I can get them in with the vision. I can get them happy by getting their loans closed on time. But how do I get them to stay for 10, 15 years instead of 2 or 3 years? Because many times they stay for 2 or 3 years.
Threaten them with a non-compete.
Hopefully, no. Hopefully that is not what you do. No, hopefully it's because you have built a sales culture and a company culture, one in which your people hear how much they mean. They feel how much they mean. You're including them in the corporate vision. You're letting them know how it benefits them. You're also informing them what they can do to help get the company to where it's trying to go. You're also showing them that you care about their region, about their division or their branch, and you're offering them services or offering them support to help them get to where they want to go. Right? I think that's the bigger part of the retention process. Yes, it's one thing to paint the vision and get them in the door. And then it's another thing that, hey, you got to be able to back up what you promised them in terms of actually getting loans closed. Mm-hmm. But then it's like, how do I retain someone for 15 years instead of just 5 years? Well, that's when it's like, what else? Where's the extra? How much do you care? Do you show them you care? Do you celebrate successes? Do you have a clear vision that they share with you and they know, more importantly, what it means to the company, but it means to them individually when the company succeeds? Mm-hmm. How are you going to help them win? How are you going to help them grow and continue to feel the same love that you shared with them to get them in the door? Is that the love they're feeling in year 3, year 7, and year 12?
Well said, Dustin.
So if there's a call to action for anyone tuning in, it's like, look, when you're running a successful business, we have to equally put in effort and build out systems and processes to attract the talent. But then we need to take that same amount of effort to create systems and processes and culture around retaining the talent. And when I look and consult or advise with individual originators, branches, or even company operators that are struggling, typically it's pretty easy to recognize they're struggling because they're either lacking the retention piece or lacking the attraction piece. The minute you can get equal parts attraction and retention, that's when you know you're an elite originator, an elite branch, or an elite organization.
Fascinating shit, Dustin.
Alrighty, John Coleman, that is all the time we have with you today.
Oh my
because
God.
I can tell you are zoned the F out, which is fine because this episode has played its purpose. It has done its role.
It has.
It'll sit in perpetuity on YouTube.
Yeah.
The people will go to YouTube. They will subscribe. The people will comment on YouTube. If there's any part of this they didn't like, they'll also comment if there's any part that they did love.
Kick rocks.
They will go to LinkedIn right now. And if we're not connected, you're going to connect with me. First name Dustin, last name Owen. You'll go to Instagram. You're going to follow at the Loan Officer Podcast. And you're going to go check out what's going on at tloponline.com because that's where you can get a free newsletter. You can read my blog. You can see where JC and I are going to be next.
Maybe.
And if you're really serious about your success, you could even look into joining our coaching community.
Fascinating.
He's John Coleman. I'm Dustin Owen. That's all the time we have for you today, but we do look forward to catching you on the next episode.